Good evening. This is Corey from the Trade Journals. It is January 31st. This is Sunday night. A lot happened in the news this past week, as I'm sure everybody knows, with Wall Street bets targeting the major short positions on the market. And this spurred some pretty serious backlash, and that's there's a lot to be said, but we'll break right into it. In unrelated news, there are talks of Chevron and Exxon merging. This would be the biggest merger of all time at a combined market cap of $254 billion. Absolutely huge. The source on this is Reuters, and it's from an anonymous source. Both companies failed to comment on it, but we'll definitely want to be keeping an eye on that. Last week, U.S. hedge funds bought and sold the most stock in over 10 years, selling longs and covering shorts in every sector. Despite that, net exposure is remaining, excuse my grammar, closest to the record highs. Melvin Capital did receive a cash influx from investors. Their net change dropped $4.5 billion from January 1st, and this is relative to the $9 billion loss received from GME. So they got cash to replace the massive loss they took, which was a 53% overall dollar loss, relative to how much they had under management. So yeah, it's crazy how massively they were leveraged into that position, yeah, it just goes to show, risk management. No, it doesn't matter how big you get. Nobody is free from variance. So they did receive $2.75 billion from Citadel to close out their substantial short on GME. So despite that, their liquidity remained strong, and obviously people weren't spooked enough to jump ship because they got $4.5 billion. There was a class action lawsuit filed against Robinhood, who restricted buying on numerous stocks on Friday and then restricted all after hours trading. Since then, there were 50 stocks that they had banned temporarily because of quote unquote volatility, and now there are only 8, including GME, AMC, Bed Bath and Beyond. I can't remember. I know Cost, Naked, and Nokia. I can't remember what the tickers. EXPR and GNUS. I can't remember what those companies are. But if you go on Robinhood under their news and updates sections, it does show what all of the companies are that were currently taken off the chessboard, so to speak. So last week also spurred quite a bit of interest from the SEC, which that could be something we want to keep an eye on, because if the SEC starts bringing down the hammer, that could really rock the markets. Also, they already have algorithms, guys, to read social media networks like Reddit and other stuff to do web scraping and figure out who your targets are and what you're planning to do. So there's even algos in the civilian sector that read all this stuff. So just understand that you're really, really under the microscope now. So for somebody to be able to pull this off twice, I mean, I think it can be done, but just know that they're going to be really prepared and really going to be coming for you guys as a unit. So just be careful, because yeah, we got them pretty good, but gosh, they've got a lot of money to throw around. So also, Republicans are pressing Biden to downsize the $1.9 trillion COVID-19 relief bill. And also heard about talks of doing a short squeeze on silver, like GME, because it's been artificially suppressed to combat inflation, I guess. So, yeah, anyways. Moving on to the economic calendar for the week. So Monday, we've got the ISM manufacturing PMI. And Tuesday, there are no major economic calendar events. Wednesday, we have the ADP non-farm employment change. And well, we also have the ISM non-manufacturing PMI. And also the non-farm employment change. The last report, it was down 123K. It's forecasted to be positive 45K. So that's certainly good news. Initial jobless is looking like it's forecasted to be trickling down. Last week was 847,000. This week it's forecasted 830. Friday we've got non-farm payrolls, also supposed to show improvement, as well as the unemployment rate. Last report was 6.7%. It's not expected to change. As for notable earnings, on Monday we've got TMO, really big earnings day on Tuesday. Amazon, Google, Pfizer, ExxonMobil, Amgen, and EA, Activision. Yep. And then Wednesday we got PayPal, Qualcomm, and AbbVie. I think that's what that is. Thursday, Merck, Bristol Myers Squibb, Gilead, Activision Blizzard, Ford, and Peloton. And then Fridays you've got a couple. I forget what LAN and EL are. All right, so here's our overnight session for Sunday. This was the screenshot was taken as of 7:45 p.m. Pacific time. So we took out Friday's low very early on in the overnight session. Couldn't hold it though. Ended up trading back inside Friday's range, and we've been going up with strength ever since. So I'm just kind of looking to see what happens as we move to test the low volume nodes from Friday's range. The key levels I'm looking at, 3740 is a big one. That is right above Friday's value area high for me on my market profile here. So, but yeah, I mean, the fact that we took out Friday's low and the imbalance was rejected suggests that we do not have, we could not find acceptance at lower prices, and therefore we're likely to move back into balance. So my initial balance here is long. Of course, I'm going to be a little bit just cautious at the open because there was a lot of money pulled out of the market last week, so it could continue to fall. But we do have a buying tail that's going in our that it shows strength to the upside. And anyway, so I'm just looking for us to trend back up, retesting Friday's high, followed by Thursday's high. Again, my next resistance is the top of Friday's value area at 37.45, and then I would suspect us to retest Wednesday's POC and then Thursday's POC, followed by Thursday's high before we move back into that major balance area near the all-time high. Here are the S&P futures for the long-term activity. This is the regular trading hours only, the U.S. session, basically. So we've got daily chart on the left. You can see we've sold off pretty substantially. Volatility increasing quite a bit here as we drop from the balance area near the high. On the weekly chart, we're right basically at a demand zone here in this bull channel looking thing. And then on the monthly, you can see our monthly candle does look pretty bearish. So we haven't really had a major correction, and again, I use the word major, it's relative, since the big coronavirus drop. But you can see, I mean, we've retraced that whole corona drop right there from March and April with ease. And yeah, so we're way the heck up there, and we'll see what happens this week, but like I said, I'll just be a little bit cautious. So again, my immediate bias is long. I'm just watching to see whether we can break back above Friday's value area high, which if we do, that would suggest we would retest Wednesday's POC, followed by Thursday's POC, followed by Thursday's high. Again, I'm going to be trading cautiously at the open. Like I said, a lot of money was pulled out of the markets last week. If we break back below Friday's low, then I will be short and looking to stay in for a while there. That being said, though, we've got the the buying tail that's been set up in the overnight session so far, and I think we are going to continue to move to the upside here. It's been looking pretty strong. So again, it looks like we'll probably remain in balance at a minimum. We'll see what happens when we retest Friday's value area high. And then the news catalysts I'll be watching this week are going to be anything involving further SEC regulation or attacks on retail traders, basically. Or if the Republicans completely put a damper on Biden's $1.9 trillion COVID 19 relief plan. So that's pretty much all I got for you guys. Thanks so much for tuning in. Like I said, I've really been enjoying doing this quite a lot. And I wish you the best of luck in your trades this week. Trade smart, please. Watch your risk. And for all you guys that are just YOLOing it out there, mad props for holding the line. But just please trade smart, use stops, and don't get trapped. Thanks so much.